The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Hope you all had a great weekend. Hope you had some time to sit back, hang out with your family, friends, and enjoy things a little bit, because this week you have no time to do those things. I mentioned at the end of last week that this is one of the busiest calendar weeks that we have on the year, and indeed it is. Kicking things off, we got durable goods orders this morning. Those came out at 8:30 a.m. If you didn't look at them, I'm sorry, but they happened. Tomorrow, we've got ADP reporting weekly employment change. We've got S&P Case-Shiller Home Price Index, the FHFA Home Price Index, so more data coming out then. Wednesday, we've got a Fed meeting. We also get EIA data on crude and refined product inventories. Thursday, PCE inflation data and personal income and personal spending numbers. Jobless claims also going to be coming out then. And then Friday, you can finally relax a little bit because there's not much then. But on the earnings side, busy as well. Tuesday, things start to kick into higher gear. We've got Visa, Coca-Cola, Boeing, Corning, Waste Management, UPS, Sherwin-Williams, Hilton, some names there. Wednesday, things really get moving. Microsoft, Meta, Costco, Procter & Gamble, General Dynamics, Boston Scientific, Robinhood. Nice little day. Thursday, Apple, Amazon, MasterCard, Altria, Bristol-Myers, Squibb. Again, just you're talking, anytime you've got 4 Mag 7 names in 2 days, that's a week right there. So a lot coming up. If you need to find time to get some sleep, I recommend the night, because during the day you should be plugged into this, not 24 hours a day, because that's not the day, but look, we got about 16 hours of daylight right now in the Northern Hemisphere. I recommend taking most of that to pay attention to what's going on with markets and the economy this week.
Yeah.
And then next week you can get back to chilling.
Okay. Deal.
So, busy week. Over the weekend in the Middle East, which had, become kind of a fulcrum for, markets in the last week. Over the weekend, we had 3 straight nights where there were no strikes between the U.S. and Iran. No formal, memorandum of understanding signed. Nothing like that. It just seems as though, from the reporting, the U.S. basically said, look, we've pretty much struck just about everything that we want to right now, so we're not going to strike anything else. And Iran came out and said, well, if you're not striking us, we're not going to strike you. We'll see how long this holds. The last time it lasted the memorandum of understanding lasted 3 weeks, but they were shooting at each other again within 5 days. Yeah. So we'll see if we get past Tuesday or Wednesday. If you want a sneaky prediction on this, I unfortunately think that things start to ramp back up probably Thursday, Friday. We've seen this.
Why that specific time frame?
Because the last 2 Fed meetings, we've had pauses in shooting around Fed meetings, and I'm just wondering if this is to, make things a little cleaner heading into the Fed. Mm-hmm. It could just be coincidence more than anything else, but honestly, so here's where I've gotten to on this. I've started keeping a calendar of what's going on any particular day so that I can actually track and recall what's going on. That's where I've had to get to now. Yeah. And in doing so, you notice these patterns that pop up when you go back and you're looking at it. and you're like, oh, this is like what happened, and this is what triggered that, and this is the timing, and here's what else was going on. And you happen to notice that the last two Fed meetings, there have been pauses in the shooting. So I find that interesting.
I'll toot our own horn for a minute here. Was it Thursday that the Axios report came out that President Trump was considering broader strikes against Iran?
Yes.
At that exact moment, oil prices were shooting towards $100 a barrel, and you on the show, Chuck, but we on the Financial Exchange said, hey, does sure feel like we could face a pivot here. We did hedge that with, but we are heading into a weekend, so we will see what happens when trading is closed. But the Axios report came out saying, oh, watch out, could be some increased hostilities. Oil prices were hitting $100 a barrel again. Everybody was writing about oil shortages because of the Red Sea stuff. And then lo and behold, we had said, look for a pivot here. It's quite possible we'll get one. And while we did not get the president coming out and making a very large public statement about it, we did see it calm down in the Middle East.
Yeah. Part of the Middle East. If you want to talk about what's going on between Saudi Arabia and the Houthis over in the western part of Yemen, things are getting ugly with at least 3, potentially 4 Saudi Aramco facilities being struck over the weekend still. Reminder, the Saudis and the Houthis were going at it for, a period of years before they finally, said, okay, enough is enough in, I think, 2022 and, took a little bit of a break. But there is absolutely no love lost between the two sides. And there are signs that the Houthis went pretty much straight for, major Saudi Aramco facilities in their round of hostilities over the weekend, which the problem that you have here is, look, you still don't have any traffic that's going through Hormuz over the weekend. Even though, things have paused from a military perspective, there's nothing moving through just because everyone's like, we're not going to send ships through. We don't want to be the first through the wall. We don't want to, see what happens. So you've got that going on. But now the indications are that in the Saudi port of Yanbu, which is on the western side of Saudi Arabia in the Red Sea, the indications are that the loadings that are happening there are only about 50% of what they were over, kind of the previous 4 or 5 months, suggesting that you might have a few million barrels of export capacity offline. Not great. The good news, potentially offsetting that, is Kazakhstan. Again, I
have not talked about Kazakhstan this year.
We talked about it last week briefly.
Oh, we did?
You might have been out. So okay. Here's the deal. Kazakhstan produces...
I was going to say, we can maybe mark the bingo card.
Kazakhstan produces around 1.8 million barrels a day of oil. They also can't really export the oil direct from Kazakhstan because it's pretty much a landlocked country, and so they say, okay, what are we going to do? The answer is they have a big old pipeline that basically runs west from the western part of Kazakhstan. It loops around the Caspian Sea and goes through Turkey to the Black Sea. I think it's the Black Sea, or maybe it's the Sea of Azov. I don't know. It's one of those two. No, it goes to the Black Sea. And what was happening last week was Ukrainian drones and cruise missiles were targeting ships loading there and blowing them up. And this is because the exit on the Black Sea is in the Russian port of, I think it's, I forget which port it is, but
a Russian port.
It exits in a Russian port. Well, this Kazakhstan oil that's flowing through, they halted the pipeline because the ships were being blown up, and you don't want to pipe oil if you can't empty it somewhere. So it was about 1.5 million barrels a day of oil that were being stopped because this is the primary export valve for Kazakhstan. Now, it also turns out that the oil that is generally produced in Kazakhstan, a decent chunk of it is run through a nice little company known as Chevron, which happens to be a U.S. company. And the word on the street is that the Chevronese, if you will, they got a little upset that, the Ukrainians were targeting tankers carrying their oil, and were like, yo, guys, can you stop this for a minute? We don't really appreciate this. So it appears that those strikes on the ships loading Kazakhstani
Let's go Kazakhstani.
Kazakhstani oil produced by Chevron have halted because when you have U.S. oil production from a third-party country that was being targeted because of a Russian exit port, that didn't really make a ton of sense. And so at least that production does seem to be spooling back up today. So that's good news that you don't have that 1.5 million barrels offline anymore.
In any case, oil's back below $90 on the West Texas crude. Across the board, we're down 6 to 7% in early trading so far today. And I don't know. I guess we're all just kind of waiting for the head fake on this because I don't think no serious person that I've heard is expecting this to be the breakthrough moment in the Middle East with the U.S. and Iran. Is it fair to say?
It could be. So
any serious people out there saying?
No, look, I'm not the seriousest person.
Okay.
It's the technical term. But I had some thoughts over the weekend.
Okay.
Why don't we take a break, and I'll talk about those thoughts next.
From markets to money to business and financial news, watch the Financial Exchange every day on YouTube. Hit that subscribe button and keep up to date on the market news you need to know. This is the Financial Exchange. Many people assume that if an asset is irrevocable, it's completely out of their hands. That's not necessarily the case. Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts, explains how these trusts can help protect certain assets from the cost of long-term care while still allowing you to maintain important rights and flexibility. The guide breaks down some of the common misunderstandings about irrevocable trusts and how they actually work. It explains why many families use these trusts as part of a broader plan to help preserve assets for future generations. Inside, you'll also find information about how these trusts work, what types of assets may be appropriate to transfer, and why the details matter when it comes to protecting what you've built. Get your free guide today. Call Cushing & Dolan at 866-848-5699. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The documents may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Fresh, Local, in season. Celebrate National Farmers Market Week, August 2nd through 8th. Visit your local farmers market for peak summer produce from sweet corn and heirloom tomatoes to peaches and blueberries. Every purchase supports local farmers, strengthens your community, and helps keep fresh food accessible across Massachusetts. Sponsored by Mass Farmers Markets, supporting over 200 farmers markets statewide. Find a market near you at massfarmersmarkets.org.
Daily financial content in your feed when you want it. Follow the Financial Exchange on Instagram. This is the Financial Exchange.
During the last segment, Michael Armstrong remarked that no serious person can accurately say what's going to happen in the Middle East. There's something along those lines.
Yeah, well, I said that I don't hear any serious people out there predicting that this is the moment of breakthrough for the U.S. and Iran.
So, as a semi-serious person, because I have a big belief that no one should take themselves too seriously.
Sure.
It's fundamentally an unserious proposition if you're too serious. So here's an interesting thought that passed through my head over the weekend. Everyone keeps looking for, what's the deal going to be that gets the sides to, agree on, on how things work. What's the deal that makes things stick? And I do maintain, if you're looking for, an actual deal that makes things stick, I don't think you can get there yet because I don't think either side has experienced enough pain to be able to say, I'm done with this.
With you. Sure.
But I had an interesting thought go through my head. And that thought was, well, what if the U.S. just ups and leaves and says, just unilaterally, we're done with this? I'm not saying that the United States will. But what if it's just what if it's just, we're not signing anything, we're not saying we're done. What if we just stop this and move on?
I guess let me think that through a little bit.
Here's the logical thinking through and where it runs into problems. But I want to just work through this a little bit.
Iran starts toll collecting.
Iran can't start toll collecting.
Why?
Lloyd's of London over the weekend or late last week basically said that they will refuse ship insurance to any ship that's paying a toll to Iran, which is, again, that's a hard stop for most shipping companies. There are a handful, mostly the Greek ones, that are hey, it's the Wild West, we'll do as we please. But the vast majority don't want to be on the bad side of either Lloyd's of London or the U.S. sanctions list.
Okay.
So, but it still is something where Iran could enforce, okay, fine, we might not take a toll, but we're still going to say, yep, you've got to come through our lane, you've got to, deal with our inspections and this and that, and Iran could very much become, not the toll taker, but, hey, they manage the flow of oil through the region.
Yeah.
Now, other countries in the region are not going to be happy with this. The Saudis wouldn't be happy with it. The Kuwaitis wouldn't be happy with it. The Iraqis may or may not, depending on what day of the week it is. The Qataris certainly wouldn't be. The UAE is already the UAE is done with Iran completely. They're okay, whatever, have at it, guys. We're building all the pipeline capacity we can to bypass you. So you think it through, and for a brief period, Iran becomes the most powerful force in the region from an economic perspective in terms of they set the price of oil, if that were the case. But it also then encourages what's already happening, which is, hey, we're going to build all these bypass pipelines to not have to deal with the Strait of Hormuz anymore. Mm-hmm. The Saudis build more heading towards Yanbu. The UAE is already building more heading towards Fujairah. You've got Iraq and Kuwait talking about building through Syria to exit on the Mediterranean. And within a couple of years, all that capacity is elsewhere, and Iran's sitting there saying, okay, great, we control the Strait of Hormuz, which doesn't really have much oil flowing through it anymore. I'm still not sure that really happens, because the issue that you run into then is if you are other countries in the region and the U.S. says, okay, we're just going to pick up and, take our ball and go home, the problem that you run into then is, okay, well, why do we need to be aligned with you if you're not going to help enforce this? And that's where the thing breaks down, in my opinion, is most likely with, basically every other country in the Persian Gulf being like, well, we're buying all this stuff from you. We're buying all this military equipment from you. We're signing all these economic deals, but you're not going to enforce, maritime freedom in the Strait of Hormuz. Well, why should we do this with you? Is the question that gets raised then. Mm-hmm. And so I think that ultimately it all points back to, again, what you said, which is, look, you could see even something like this persisting for a week, a month, or something like that, but eventually push comes to shove and someone's going to get upset, and the situation is just not stable in that outcome. So I go back to, look, we might just be ping-ponging back and forth for,
I think that's the most likely.
Until someone finally says, enough, we're willing to truly accept whatever these terms are, either the U.S. saying we've had enough or Iran saying we've had enough, but we're not there yet, and we know this because there hasn't been a durable deal that's been signed.
Yeah. Yeah, it's hard for me to imagine anything long-term agreed to until there is a lot more pain for one of the two parties, or both.
Yeah.
So that's kind of where I land on it, is more bouncing around.
I want to hop forward one story to this piece. China chipmaker CXMT jumps 466 in debut after blockbuster IPO. So CXMT, if you haven't heard of them, newsflash, I haven't either. Literally have never heard of this company before today. Here's what I do know. They make memory chips. Mm-hmm. And there's a great quote. I don't know who to attribute it to originally, but the quote is, when China enters a room, profits leave. Which I think is it's a really good quote, and you can go through all kinds of industries where that's the case.
EVs is the easiest one to look at. Globally, nobody can make EVs to compete with the Chinese because, well, for a number of reasons, but they've made them outrageously cheap. So you either block them from your market, or you just lose your industry.
Even before EVs, a lot of electronics components,
TVs,
textiles. Think about where China kind of got its manufacturing start. So here are the two things that I think are, that markets are going to struggle with, or that this stock's going to struggle with. Number one, there is this huge memory chip shortage that's driven prices up. Mm-hmm. Do we think CXMT is just going to sit there and be like, yeah, we're going to let the memory shortage persist? No, based on what we know about how China tends to drive these things, they're going to try to fill that gap and more. It thus becomes really hard to justify almost 500% single-day pop in the stock, based on the fact that profits tend to disappear when Chinese companies enter an industry. And this company's already in it, but it's freeing up more capital for additional expansion and things like that. So I think this is notable. And by the way, memory chip stocks are feeling it today. When you look at how they are performing, they are being dragged even though the index is trying to move up. Micron is an example, down 5%. Quick break. Wall Street Watch is next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. Protecting your assets doesn't always mean giving up control. Get Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts. Learn how to protect your assets while maintaining planning flexibility. Get your free guide today by calling 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. For veterans, every day is a commitment to service. This Veterans Day weekend, be part of something meaningful at the DAV 5K Boston. Join the thousands of runners and walkers at Fort Independence on Castle Island for a day of community, remembrance, and gratitude. Proceeds help fund the programs and services provided by the Disabled American Veterans Department of Massachusetts. To To register or make a donation, please visit dav5k.boston. That's dav5k.boston.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive. Most of the time, it's because no one nearby performs CPR. Every walker who joins HeartWalk means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Find your local HeartWalk at heartwalk.org.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The documents may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Our Senators Edward Markey and Elizabeth Warren and Representative Ayanna Pressley are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
This is Tucker Silva with the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about how Medicaid irrevocable trusts operate. Todd, many people are afraid that if they transfer money to an irrevocable trust, they will be giving up control of their assets and will have to ask their trustee for permission to spend their own money. Now, is this a valid concern?
No, it's really not. And folks, when you think about irrevocable trust, please remember that there are many different kinds of irrevocable trusts. There are some that require a loss of control, rigidity, inflexibility. However, the trust we're talking about when you're protecting assets from a nursing home allow the donor to remove and replace the trustee, allow the donor to have really an unbelievable amount of control over the assets that are in the trust. They can live in their house, they can manage and invest their own money, they can sell a house, they can buy a new house. When the money's invested, they can have the income come directly to them. Folks, the control you keep over your assets in an irrevocable trust is really something you must try to learn about. And that's why we're giving you away a guide today to help you understand these trusts.
Request this brand new guide from the folks at Cushing & Dolan at 866-848-5699. It's called Unlocking the Power of Medicaid Irrevocable Trusts. Cushing & Dolan have been helping families like yours for more than 30 years, and find out if they can help yours too. 866-848-5699, or you can request it from legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Well, after a strong open, markets have now reversed course and are mixed ahead of a very busy week, including a big test for new Fed Chairman Kevin Warsh in his second meeting, an inflation reading, and tech earnings from Microsoft, Meta, Apple, and Amazon. Right now, the Dow is up 0.5% or 262 points. S&P 500 down 9 points, about 0.1%. NASDAQ down nearly 0.5% or 111 points lower. Russell 2000 is up over 0.2%. 10-year Treasury yield down 2 basis points at 4.65%, and oil plunging 6.5%, trading at $83 a barrel. Several energy companies are trading lower in reaction to the relief rally we're seeing in oil prices after the U.S. and Iran agreed to pause attacks against each other. Meanwhile, Chinese chipmaker CXMT made its stock market debut in Shanghai, surging 466% to become the country's most valuable listed company. Sticking with the chip sector, where Nvidia shares are falling nearly 4% following reports that it is in talks to provide a roughly $250 billion backstop for OpenAI as part of a massive data center project in southern Ohio. And shares in Cracker Barrel are down over 5% after the restaurant chain announced chief executive Julie Masino will step down effective August 10th after a few years of controversy around its refresh and logo change. Former Bloomin' Brands CEO David Deno will take over as its new CEO. I'm Tucker Silva, and that is Wall Street Watch.
Cracker Barrel used to be my go-to stop on the way home from Foxwoods back in the day.
Yeah, I've voiced not a fan
of Cracker Barrel.
Yeah,
it's fine.
Yeah,
it's fine. Piece in the Wall Street Journal: the unsettled vibe that's creeping through the markets. Mike, what is this unsettled vibe and
concerned that it's a bubble?
Is that what it is?
I mean, it's specific, I guess, to. Yeah, it's that stocks are really high and you have all this other stuff going on, such as the potential for higher interest rates, tension in the Middle East, and most importantly, questions about how much these giant companies are going to spend on AI development and whether or not there's ever going to be a return on it. So yeah, I think that's what it is. This article makes it seem mysterious. I don't think it's an unsettling, mysterious vibe. It's just a open question as to whether or not the massive investments are going to pay off.
The question is simple. Can indices find a way to go up if semiconductors don't? That's the game at this point. And today they're being answered negatively. The S&P opened today up around 60 points. As of this speaking right now, it's down 14. So down, it's a 1% intraday reversal. And one of the worst performing parts of the market right now is the semiconductor index, which is down 4.25%. Like this is the whole ball game. What's holding the index together is that it's this what we call dispersion. You've got other parts of the market that are holding up, and that money is rotating into, rather than investors just saying, I want to sell my stocks. Instead, it's, I want to sell those stocks and buy other ones. So as an example, in tech today, semiconductors are off, again, 4.5% right now. Mike, do you know what software happens to be doing?
No.
It's up 3%. It's not investors saying, I'm going to sell my semiconductors and go buy bonds.
Right.
It is investors saying, well, I want tech exposure, so I'm going to move and go from Micron into Salesforce, or I'm going to go from Nvidia into Microsoft. That is what we are seeing in the market today.
But I will say that interest rate trade-off, the bond trade-off that you just mentioned, while not being exercised today, is a bigger looming threat to markets than it has been in, I guess, modern investing history since great financial crisis, right? I mean, consider the alternative right now. If you choose to sit out equity markets, you can lock in through a U.S. Treasury bond a 10-year guaranteed rate of return of 4.653%. There is the threat that could go higher in the future, but that's a reasonably compelling alternative compared to the entirety of the 2010 decade, for example. And I think that's a missed point sometimes.
The question is, what does the next 10 years... The question for answering that is, what does the next 10 years look like? And specifically, hey, is it the 2010s? Like, think about what the 2010s were. Hey, interest rates were nothing because there was very low growth for most of it. There was no inflation. And stocks actually did pretty well. So would you have wanted to get 4.6% then? I don't know. Like the alternative in that decade was stocks produced double-digit annual returns.
Yep.
Another question is, okay, is the next 10 years not the 2010s, is the 1970s? If you're dealing with inflation averaging 5%, you're getting 4.6%, you're losing purchasing power.
Yep. Or is it the 2000s? Inflation's low, but the stock market makes nothing for a decade and is defined by two of the worst crashes we've ever seen.
Correct. And look, in all honesty, it's going to be none of these. It's going to be something new that we've never seen before. Before the 2010s. I still remember back in 2011, the big concerns in 2011 were, hey, are we going into a double dip recession? Is the Eurozone going to hold together? Are people ever going to have jobs again because unemployment's still really high 3 years after peaking? Like, these were the questions that were facing us then, and they turned out to not be things that you needed to worry about for the next 10 years. The big questions facing us now, you look at them, hey, can we, durably get inflation down? What's the Middle East going to look like? What's the situation between the U.S. and China? What's happening in terms of, resource security and manufacturing security? Like, these are the big ones for the next 10 years, in my opinion. But, 10 years from now, we might look back and be like, yeah, those weren't the actual things that mattered.
Right.
And no one looks back now and is like, man, that Eurozone thing really was a problem. But at the time, it was, okay, remember, we're not talking Brexit. This was back when you were talking Grexit and Italy.
Greek debt crisis and
Portugal, get out of here. Those were the things that you were talking about back then. And those didn't materialize into problems at all. But I still remember them being very front and center in that summer of 2011 when those fears were acute. So I think right now, and obviously the one that you got to add in is, look, what does AI do to the entire world economy? Which brings us then to this next piece, this Wall Street Journal exclusive.
Oh, yeah.
Nvidia in talks with OpenAI to guarantee $250 billion in financing for data centers. So here's the deal. Here's the deal. Is Masayoshi Son is he's the big kahuna at SoftBank, the Japanese investment firm. And they are trying to build, I think it's they're trying to say that eventually it's going to be like a $600 billion data center in Ohio.
Okay.
It's obviously not right now. The lead tenant in this thing is supposed to be OpenAI. And so what NVIDIA is talking about doing is not giving OpenAI $250 billion right away.
Sure.
But rather saying, hey, if you need to borrow in order to finance the leasing of that data center from SoftBank, we will guarantee that loan for you. They haven't specified the terms or anything. We don't have any details, but we're going to guarantee that loan so that construction can move forward.
So would you define OpenAI as one of NVIDIA's top 10 customers?
I would define them as one of their top 2 customers.
Okay.
Yes.
Yeah, so one of my top 2 customers is having trouble financing one of the critical build-outs that they need in order to keep buying my product. So in order to, again, if you want to take the most negative view here, which I do, in order to continue that gravy train, I'm going to use my creditworthiness to back up your expansion project so that you can keep buying my semiconductors at these elevated prices.
Yes. The best summary that I've seen of this is from Andy Constant on Twitter, on X. And Andy's an ex-Bridgewater guy who occasionally is right, occasionally is wrong, but I thought that his summary here is good. Here's his quote from this morning. To make this simple, Masayoshi Son is a government-subsidized home builder. OpenAI is a no-income, no-job home buyer who needs a mortgage. And Nvidia is Fannie Mae, who enhances the credit of OpenAI and has a monopoly to sell wallboard, lumber, steel, and concrete to the home builder.
Yeah,
so it's basically, hey, you're trying to buy this house. I'm going to guarantee your loan, and then I am going to help to finance the construction of the house that you're building. And hopefully I can keep all these plates spinning.
And what brought down things during that event,
Yes.
the great financial crisis, was the misunderstood interlinkings of all of these companies and their attachment to the housing market, which was seen as this market that could never decrease in value. And
Feels pretty similar.
you are linking the financial success of the second largest company in the world. Is Nvidia now number 2?
One of the top 2 companies in the world.
One of the largest 2 companies in the world, to these other companies that are far less creditworthy, and you are inexorably linking them together in terms of their success or failure.
Well, and look, OpenAI, we've talked about, like, they've got real questions as to how they're going to be able to revenue-wise and, profitize. And when we talk about, SoftBank's history is littered with malinvestment that ends up just somehow getting bailed out by someone. Mm-hmm. I mean, they were like one of the lead financiers in WeWork. They've got a pretty decent track record of making the wrong investment at the wrong time, but somehow keep getting access to capital just because I don't know who they know, but it must be everybody. So we're going to see how this goes, but it's more circular financing, money moving from one company to another that goes back into the company when they buy their product. And again, it's more and more creative financing to keep things going. But we'll see how things go here. Quick break. We've got let's talk about single stock futures contracts next.
The Financial Exchange is now available on your Alexa smart speaker. Ask to play the Financial Exchange and catch up on anything you might have missed. This is the Financial Exchange Radio Network.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The documents may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Many people assume that if an asset is irrevocable, it's completely out of their hands. That's not necessarily the case. Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts, explains how these trusts can help protect certain assets from the cost of long-term care while still allowing you to maintain important rights and flexibility. The guide breaks down some of the common misunderstandings about irrevocable trusts and how they actually work. It explains why many families use these trusts as part of a broader plan to help preserve assets for future generations. Inside, you'll also find information about how these trusts work, what types of assets may be appropriate to transfer, and why the details matter when it comes to protecting what you've built. Get your free guide today. Call Cushing & Dolan at 866-848-5699. That's 866-848-5699. Or you can request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Our Senators Edward Markey and Elizabeth Warren and Representative Stephen Lynch are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Subscribe now to our YouTube page, where you'll find daily interviews and full shows of the Financial Exchange. We'll get you caught up on anything and everything you might have missed, right here on the Financial Exchange.
All right, we got word over the weekend that the CME Group is going to be launching single stock futures. And the basic premise of this is, look, futures exist in, indices and on commodities, broadly speaking.
So the oil that we quote is a futures contract.
Yes, it's basically saying, hey, will you buy X barrels of oil for delivery on this date? Mm-hmm. Likewise, futures on a stock are, will you buy X shares of this stock for delivery to your account on this date? The big thing is, well, there are a couple things. The first is that, in theory, you can borrow more money doing this than if you are just, using margin in a regular brokerage account, because the margin requirements are less. You can leverage, I think it's up to like 6 or 7 to 1 instead of just 2 to 1.
Perfect.
So you can take on more leverage if you want to. But you're not required to, but like you could if you want to. Other things. A contract is 100 shares. So if you're talking about, let's just use Nvidia as an example. If you have to buy 100 shares of Nvidia right now at $200 a share, you need $20,000 to do so. If you're doing it on margin, you could do it with only like a few grand, so you don't need to put up as much.
Yep.
Naturally, your losses are magnified in the event that it goes down, but your profits are, they grow from that leverage. Other things that are interesting about this. Back in the early 2000s, excuse me, single stock futures were authorized and allowed, actually. They never really got much interest, and so they were canceled. So here's the piece that's interesting to me. There are all of these weird exchanges that are set up online right now that have that are basically like offshore derivative exchanges. And they
effectively allow you to trade 24 hours a day.
Yes. I don't know their actual legal status in the United States, so I'm not really going to tell anyone any of them. But here's the deal. This is either going to be, it's going to be one of two things. Either, hey, there's not really that much interest in this, because one of the benefits of this new single stock futures trading is it's going to be like 23 hours a day, so you can trade them all the time. So it's either going to be, hey, there's no interest in this, and so, okay, it's not really something where those offshore markets are going to be able to grow much more, or, hey, everyone's totally interested in this, and you can use these futures without having to do the weird offshore ones, and the offshore ones aren't going to get much more business because of that.
So either way, those offshore weird markets that nobody really cares about are maybe in some trouble.
It seems to be kind of lose-lose.
Yeah.
And so that's kind of how I look at it.
Many people assume that if an asset is irrevocable, it's completely out of their hands. Well, that's not necessarily the case. Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts, explains how these trusts can help protect certain assets from the cost of long-term care while still allowing you to retain important rights and flexibility. The guide breaks down some of the common misunderstandings about irrevocable trusts and how they actually really work. It explains why many families use these trusts as part of a broader plan to help preserve assets for future generations. Inside, you also find information about how these trusts work, what types of assets may be appropriate to transfer, and why the details matter when it comes to protecting what you've built. Get your free guide today by calling Cushing & Dolan at 866-848-5699. That's 866-848-5699. Or you can request the guide from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
The comparison I'll make, I guess, is before sports betting was legalized in the United States, there were all these offshore platforms that existed of, questionable legality. Okay, what happened once, sports betting was legalized in the U.S.? Well, everyone used the legal ones. It didn't result in, more business for these offshore ones. I can't even remember what the names of them were or if they still exist. But this is kind of the same thing. Hey, if there's really that much interest, all right, the offshore ones are not in good shape, and if there isn't, well, then the offshore ones are pretty much maxed out.
Yeah, that's
likely
how
it feels like that, in my opinion. Taking
a look at markets?
No, I don't want to do that. I don't like looking at them too much. You don't want to spook them. You don't want to open the box too much. Oh, what's in the box? Right. America's demand for power soaring, and so are the costs of building out the grid. Yeah, it's supply and demand. If you need to build more grid but you don't supply more grid, then grid costs more.
Yeah. Cost of large-scale solar projects increased to an average of $69 per megawatt hour, up from $58 last year. Batteries cost are all up. So same time that a lot of those tax credits are going away, the costs themselves are going up because guess what? There's still demand even without the credits.
Quick break here. We're back with more in just a bit.
I was 24 when I had a stroke.
I was 35 when I suffered a heart attack.
I was 46.
I was 62.
It's a fact. Cardiovascular disease is the leading cause of death in women.
But we can fight against our #1 killer.
Talk to your doctor about your risk factors.
Know your family history.
Learn the warning signs and symptoms.
Together,
let's go red for women.
Visit goredforwomen.org to learn more.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The documents may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk Every dollar donated means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local Heart Walk. Extraordinary starts with you. Join Heart Walk today. Find your local Heart Walk at heartwalk.org.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network. Every mile can make a difference for a Massachusetts veteran. The DAV 5K Boston returns to Castle Island on Saturday, November 7th for a family-friendly day of community, remembrance, and support. Whether you run the 5K, join the 1 mile walk, or make a donation, your participation helps further the mission of the Disabled American Veterans Department of Massachusetts. Honor those who served. Sign up today at dav5k.boston. That's dav5k.boston.
Our Senators Edward Markey and Elizabeth Warren and Representative Jake Auchincloss are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Many people assume that if an asset is irrevocable, it's completely out of their hands. That's not necessarily the case. Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts, explains how these trusts can help protect certain assets from the cost of long-term care while still allowing you to maintain important rights and flexibility. The guide breaks down some of the common misunderstandings about irrevocable trusts and how they actually work. It explains why many families use these trusts as part of a broader plan to help preserve assets for future generations. Inside, you'll also find information about how these trusts work, what types of assets may be appropriate to transfer, and why the details matter when it comes to protecting what you've built. Get your free guide today. Call Cushing & Dolan at 866-848-5699. That's 866-848-5699. Or you can request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive. Most of the time, it's because no one nearby performs CPR. Every walker who joins Heart Walk means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local Heart Walk. Extraordinary starts with you. Find your local Heart Walk at heartwalk.org.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our new guide this month is titled Talking to Your Kids About Inheritance. Mike, what are some of the considerations for what needs to be brought up in conversations with your kids about their potential inheritance?
Well, first things first, I don't think it's always necessary that you do have the conversations, but just beware that if you don't, it can lead to confusion after the fact, especially if it's a non-equal distribution of assets. It can oftentimes lead to infighting. We've all seen that one before. And it can oftentimes lead to people making financial decisions because they're unaware of an inheritance that could be coming that might have been different had they been aware that someday, hey, this might be coming my way.
They're never easy conversations to have, but they're typically easier before there's a crisis as opposed to having to have them during or after the crisis.
Well, I mean, to put it plainly, at a certain age, you might not be able to explain the decisions, and that can lead to even tougher conversations. But what I would urge people is to, think about how to have those conversations because, like I said, on more than the number of occasions that I would like to see, I have seen inheritances tear families apart. Unfortunately, that's what money can do to people. And if you have those conversations up front and early on, it can at least go a long way to potentially prevent that.
The guide is titled Talking to Your Kids About Inheritance, and you can request it by calling 800-393-4001. You can also request it online at armstrongadvisory.com, and that phone number is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Good morning. Welcome back to the Financial Exchange. It's a busy Monday here on the Financial Exchange, busy week here on the Financial Exchange with lots of economic data and market news out. Early in trading, we've got oil down, stocks flat-ish. They briefly dipped negative for the day after opening the morning up nearly 1%, but the S&P 500 now up 1/5%. The NASDAQ up about 1/20%, so basically not moving. Then the Dow up 300 points or 0.6% in early trading. But this week, big week for a few things. One, earnings. Busy earnings week with some of the largest companies in the world that will be reporting. So Wednesday, we really kicked things into high gear with Microsoft going after the bell along with Meta. Thursday after the bell, Apple and Amazon reporting earnings. So what investors are going to be looking for in 3 out of the 4 of those, pretty much everybody other than Apple, is how big are your spending plans now? And what is the return on investment going to be? Last week, we had Google's parent company Alphabet reporting earnings, and they disclosed that they'd be pouring $200+ billion into their capital expenditures for semiconductors and the likes. Investors didn't love it. They sent the stock down, what was it, 5-6% in trading that first day after earnings. So not a good news story for Alphabet when they reported their earnings. I suspect we're going to get more of the same from many of these folks saying, look, we're going to continue to pour money in here, but that's what investors will be asking. On top of that, in the earnings calendar for this week, we have Visa, Coca-Cola reporting earnings, Seagate Technology, Lam Research, Procter & Gamble, MasterCard, a whole bunch of other companies outside of the traditional semiconductors and tech stocks reporting. But all eyes to be on those big tech companies as they outweigh just about everybody else. Then later on this week, we will be hearing from the Federal Reserve under new chair Kevin Warsh, his second meeting at the helm of the Fed, and taking on what some have criticized as a bias towards lower interest rates at behest of the president. And so when we take a look out at the likely outcomes for not for Jay anymore. Kevin, thank you. At the meeting this week, there is currently a 62% chance that he leaves interest rates alone and about a 38% chance that he ends up hiking. We'll talk a little bit more about Warsh and the Fed in a bit here. Looking elsewhere at markets, the rate on a 30-year fixed-rate mortgage in the midst of what's been a pretty disappointing year for home sales and home listings. The inventory has barely budged this year, probably on concerns about these higher rates. The 30-year fixed-rate mortgage pushing 7% again. We're at 6.81%. as of Friday, according to Mortgage News Daily, and we don't have interest rates moving around much this morning. Finally, elsewhere in markets, according to AAA, the national average for a gallon of gasoline sitting at $4.11, down a little bit this week after a weekend of calm. It's a weekend of calm for how you can describe it in Iran. So more to come on all of that. But the Fed's new chairman, Kevin Warsh, is going to face a pretty big test here. Like I said, there is about a 67% chance that he does nothing at this upcoming meeting and 62% chance that he leaves interest rates right where they are. That's according to the Chicago Mercantile Exchange. What's unique about this, generally speaking, when you are a couple days out from a Federal Reserve meeting, as we are right now, there's a high degree of certainty about what the Fed is going to do. Generally speaking, over the last several years, through the last two Fed chairpersons, they have forecasted pretty clearly what they intend on doing at the next meeting. And you pretty much know, they're going to keep rates where they are, or they're going to hike. You're certainly not going to get a cut at this next meeting, but markets are really uncertain as to what to make of this new Fed chair and where he brings interest rates, Chuck.
And that's fine.
I agree. I think it's a good thing.
We don't,
but it is different from the last few years.
It is. I'm not saying it's good or bad. It could prove to be either. I've said for the last couple months, hey, if Warsh proves to be good at his job, it's going to be just fine. If he proves to be bad at his job, well, you probably it won't matter what he's saying if he's bad at his job. Mm-hmm. It's, can you set proper monetary policy to get the result that you want? That's what's going to matter. So I think that in looking at, what we have here, what we said during the, transition over to Warsh, we said, look, one of the outcomes of this is that at least in the short term, you might see rates, need to move up simply because, hey, if you're not exactly sure what the Fed chair is going to do, you probably want a little bit more cushion and a little bit more risk premium associated with that, just so that you can say, if things move against me, I'm covered. And so that makes sense conceptually there. Eventually, you're going to get a better sense of exactly what Warsh likes to do on the, what in terms of timing and magnitude of moves and what things he considers to be important. But right now, we're still in the early days, and this is why I caution anyone against saying that Warsh is either doing, a great job because interest rates went down 1 week, or a terrible job because they went up 1 week. Like, let's give the guy a chance to breathe a little bit. Now, I do think this is potentially an important meeting because clearly Warsh, if he decides to raise interest rates, not him, but if he's able to convince the committee to raise rates here, I think it does send an important signal. But if he doesn't, I don't think it necessarily says, oh, he's definitely the opposite. I think he can send an important signal, but doesn't necessarily need to. So
it would seem to me, Chuck, that based on commentary from other voting members of the Fed, that if Warsh wanted to move the committee towards higher rates, he would be successful in doing so. The bigger question to me is whether he can be successful in keeping rates where they are, which I also think he would be successful in doing so for the time being. And to me, that's where I think he likely lands. Hey, we got a better than previous inflation report most recently, and oil prices, at least as of this week, are dropping, so therefore I'm justifying no rate hike. I think that's pretty justifiable. I don't think he would have any challenge in bringing a bunch of members along with a rate hike, though.
The single best move he could do, in my opinion, he's not going to. I'm hiking 50 bips. If Warsh actually lays down a marker that he's not going to tolerate inflation, it will go so much further than anything else he could say or do.
Yep.
He's not going to do that.
Yeah, it seems to contradict his stated positions on a few things, such as the productivity increase you might get from AI. Like, to me, if you want to hike 50 basis points, you would be doing it because you are concerned about what we are seeing regarding inflation, part of which is due to the AI spend. And I think that Warsh, at least from his public comments a year ago, seems to very much disagree with that path for inflation. But I tend to agree. A hike, no matter the magnitude, would, I think, do him a lot of credit and credibility at this point in time. Well, I guess we don't know. We'll find out tomorrow. We'll find out Wednesday when he speaks.
Let's take a quick break. When we return, we're talking about grocery prices after this.
The Financial Exchange is now available every day from 11 to noon on SiriusXM's Business Radio Channel 132. Stay informed about the latest from Wall Street, fiscal policy, and breaking business news every day. The Financial Exchange is live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
The most important part of an inheritance isn't always the money. It's making sure your family is prepared for what comes next. Hi, this is Chuck Zodda from the Armstrong Advisory Group. Too often, important estate planning decisions are discovered only after a loved one has passed. Your plan may be very specific, but it can still fall short if your family doesn't understand your wishes. Our new guide, Talking to Your Kids About Inheritance, explains how thoughtful conversations today can help create greater understanding tomorrow. You'll learn when to have these discussions, how much information to share, and why clear expectations can help your family navigate the future with confidence. You can get your free guide today by calling 800-393-4001. That's 800-393-4001, or request it online by visiting armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Protecting your assets doesn't always mean giving up control. Get Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts. Learn how to protect your assets while maintaining planning flexibility. Get your free guide today by calling 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Every mile can make a difference for a Massachusetts veteran. The DAV 5K Boston returns to Castle Island on Saturday, November 7th for a family-friendly day of community, remembrance, and support. Whether you run the 5K, join the 1 mile walk, or make a donation, your participation helps further the mission of the Disabled American Veterans Department of Massachusetts. Honor those who served. Sign up today at dav5k.boston. That's dav5k.boston.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Fresh, local, in season. Celebrate National Farmers Market Week, August 2nd through 8th. Visit your local farmers market for peak summer produce from sweet corn and heirloom tomatoes to peaches and blueberries. Every purchase supports local farmers, strengthens your community, and helps keep fresh food accessible across Massachusetts. Sponsored by Mass Farmers Markets, supporting over 200 farmers markets statewide. Find a market near you at massfarmersmarkets.org.
Remember, you can watch the show live every day on our YouTube page. We've got market updates and breaking business news all morning long, plus a full archive of all our show's content. It's all there with the click of a button at youtube.com/The Financial Exchange Show.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Register for this year's DAV 5K on Saturday, November 7th at Fort Independence on Castle Island. If you're not able to participate, you can still support our great American heroes by visiting dav5k.boston and making a donation today. Your participation helps provide vital services like free transportation to medical appointments and safe housing for single veterans and their families. Donate today at dav5k.boston. That's dav5k.boston.
Mike, what is the rockets and feathers effect?
New one for me, but it is the effect that I think everyone has felt with inflation, which is that prices rocket higher and then fall like a feather, which is pretty reasonable comparison to make and one that's easily understood. So I think most people can understand that. Is it grounded in fact, Chuck? It seems to be. I don't see grocery prices coming down very frequently.
Well, here's the thing, and I got to be honest. Like, we talk about this a lot, but here's the thing: prices don't come down,
right?
Ever. And what I mean by that is not that like one or two prices don't. They do, because usually the things that cause like the egg kerfuffle a couple of years ago when egg prices went sky high, okay, the bird flu ends, and hey, farmers can get more money, raising chickens to, sell eggs, and so the flock grows, and what once was a shortage turns into a glut. That's the very nature of commodity markets.
Sure.
Likewise, with beef right now, beef prices have been going crazy for the last several years. Well, eventually, some enterprising young rancher is going to be like, hey, we can get more money selling all this beef. Let's raise more cows. And sure enough, what you're going to end up with then is the shortage you have now turns into a glut 5 years from now, because it takes a while to, transition the size of, a herd. And that's how it goes. But what I do mean is, hey, the price level overall doesn't usually go down. And the reason why is that from an economic perspective, we've realized it's really bad if prices tend to go down over time. And I know all of you people listening are like, Chuck, you're a moron. Like, how could anyone let you speak? I get it. But here's the thing. When prices go down, I want you to, put yourself in the head of someone where prices are always going down.
Mm-hmm.
If you're trying to buy a house and it's going to be cheaper to buy a house next year,
do it later.
You won't buy the house this year. You'll say, I can get it even cheaper later.
Yep.
And if the price of milk is going to be cheaper tomorrow, you'll say, I'll buy it later.
Yep.
And if the price of tires is going to be cheaper next month, you'll say, I buy it later. And so what you end up with...
This is what has happened in every terrible recession in the United States. Great Depression, 08 recession.
Forget those. Go through the second half of the 1800s, where I think we had, it was like either like 15 or 17 recessions in the last 50 years of the 1800s. And the reason why was because you had these deflationary spirals that would take place where, okay, prices start going down, people stop spending money, they expect prices to go down, so they keep spending less money, and you just ping-pong back and forth in and out of recession.
So practically speaking, we have a government and Federal Reserve that does not want to see deflation, so they intentionally try to avoid it. The other piece, too, is a massive part of any inflationary environment that we see is either caused by or corresponds with rising wages.
Correct.
And it might be relatively easy to bring egg prices down depending on the conditions or computer hardware down. You're not going to have a lot of luck telling your employee, hey, Bob, I know you got a raise last year, but this year egg prices went down, so I'm actually cutting your salary by 3%.
Right. So, Mike, I want you to play a couple roles here for me.
Okay.
First, I want you to be an oak tree.
Got it.
Okay.
Pretty short for an oak tree.
You beat me to it. Okay, bad example.
A 3-month-old oak tree.
Mike, I want you to be an asparagus.
Okay, yeah, I can do that. Yeah.
You're an asparagus.
Yeah.
Hey, Mike Asparagus, how you doing today? Oh, good. I'm glad to hear that. I'm going to chop you down, and someone's going to give me 1 cent for you. I know that your cousin I got 2 cents for last week.
No.
But you're only going to get 1 cent today. The asparagus...
You are idiots.
Thank you, I know. The asparagus can't do anything about it. It can't say anything. It just gets chopped down and whatever. Now, Mike, I want you to play the asparagus farmer, okay?
No.
You have to. You're the asparagus farmer now. Hey, Mike.
We're not going to be able to complete this.
No, Mike, you're the asparagus.
Go on.
Tucker, I need you to stop.
I don't know.
Go on. Sorry.
You blew it.
Tucker with the sound effects.
All right. Mike, you're the asparagus farmer right now.
Yeah.
Hey, Mike, I know that we paid you $12 an hour last year. This year, we're only getting half as much for the asparagus. I need you to take $10 an hour.
No. I'm just gonna not grow the asparagus.
You're gonna go and work some other job.
Yeah.
That still pays you 12 or 13.
Yeah.
And this is the big thing is prices tend to move up because wages tend to move up. And really, when prices as a whole move down, it usually indicates something is really bad for the economy. Everyone wants deflation because they assume their earning power remains the same. The only way deflation actually tends to happen is if earnings power is reduced. And so people are like, yeah, I want prices to go down and I'm still making my wage. Well, how does that happen for everyone? Like, tell me.
The only way it happens is if you're on Social Security.
But even there, like, we're still like something else is being screwed. Like
100%.
There's a problem somewhere.
It's just you
are
doing okay. Yeah, I mean, like, look, the last time we had deflation, July of 2009, prices fell year over year by 2%. Yeah, like, you did not see that happen otherwise.
Was that a good economy then?
Until 1955. I don't remember precisely the conditions there, but again, not economies that you want to live through. July of 2009.
No, it was basically the worst economy that anyone in the last 100 years had lived through.
Right.
We'd like to avoid that if at all possible. I want to talk about this piece in Wall Street Journal. Big companies are starting to hire again.
Nope, they started in January.
Defying predictions of AI wipeout. So a few things. Number one is Mike notes, yes, they started in January. Number two, as I say like almost every day now, the AI models that you are seeing are the worst you're going to see for the rest of your life. So just because companies are hiring today doesn't mean that they will tomorrow. Third point, the latest rise of like AI agents and things like that really started to take hold in like highly tech savvy businesses 3 to 6 months ago.
Right. Yeah. This year.
Like the average. This is like when the drill was invented, being like, well, people are still using screwdrivers. Well, okay, you gotta give it a minute for it to like seep out everywhere.
Yeah, I think the bigger story here is that companies who were initially shocked by the president's tariff plans and didn't know what to do have now moved past those concerns because the Supreme Court threw a whole bunch of them out and the president has replaced what was a whiplash effect of tariffs with a pretty consistent 10 to 12.5% rate across the board that seems a lot calmer than it was this time last year. So I think that's really the whole story here, and I don't think we're seeing much at all in the way of AI hiring, firing, or anything else. So that's my take so far.
But let's, this is kind of like the people who back in, the summer of 2020 are like, well, New York City's dead forever.
Yeah.
Well, no.
Certain jobs might be dead forever. I'm just not sure which ones yet.
Let's see how this all evolves here is my point. Quick break, and we're going to be talking about big cities and kids after this.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Our Senators Edward Markey and Elizabeth Warren and Representative James McGovern are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The documents may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
This is Tucker Silva with the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today, we're talking about how Medicaid irrevocable trusts operate. Now, Todd, it takes 5 years to protect your assets from the cost of long-term care. If you aren't sure you or your spouse will make the 5 years before going into a nursing home, should you even bother to do your estate planning?
The answer is absolutely yes, you should bother. And here's why, folks. There's people who maybe don't even start their planning until they're 80. It doesn't mean just because you're 80, you don't try, you don't plan, right? 85, you plan. You don't know whether you're going to get sick or not get sick. But by the same token, when you're 65 and you're doing your planning, you also might not make it past the 5 years. So just because you might not make it past the 5 years is not a reason to get this clock started. For example, lots of times when we put assets in the trust, we leave lots of assets outside the trust, especially IRA assets. So let's say you made it 3 years, but you had $200,000 in an IRA outside the trust. If I got $1 million worth of assets in the trust, I'm happy to spend $200,000 of my IRA to get past the remaining 2 years to get me protected from the nursing home with the $1 million that went in there. So getting the clock started is always better than not having the clock started.
Cushing & Dolan have been helping families like yours for more than 30 years, and find out if they can help yours too. Request this brand new guide called Unlocking the Power of Medicaid Irrevocable Trust. Call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Markets have erased gains from a strong start to the day ahead of a very busy week, including a big test for new Fed Chairman Kevin Warsh in his second meeting, and tech earnings from Microsoft, Meta, Apple, and Amazon. Right now, the Dow is up 0.33% or 169 points. S&P 500 down 0.2% or 14 points lower. NASDAQ down nearly 0.5% or 111 points lower. Russell 2000 is up 0.4%, and your Treasury yield down 3 basis points at 4.64%, and oil down over 6.5%, trading at $83 a barrel. Chinese chipmaker CXMT made its stock market debut in Shanghai, surging 466% to become the country's most valuable listed company. Sticking with the chip sector, where Nvidia shares are falling over 4% following reports that it is in talks to provide a roughly $250 billion backstop for OpenAI as part of a massive data center project in southern Ohio. Elsewhere, shares in Cracker Barrel down over 4% after the restaurant chain announced chief executive Julio Massino is stepping down after a few years of controversy around its refresh and logo change. And some breaking news in media after NBC Universal and YouTube have reached a multi-year deal that will see Peacock cast into the platform for YouTube Premium subscribers, including NBC's sports portfolio of the NFL and NBA, Universal films like the Minions franchise as well. The partnership comes weeks after Comcast announced NBC Universal would split from its parent company. I'm Tucker Silva, and that is Wall Street Watch.
You ever see a Minions movie?
Several. Kids
Any
watch
good?
them all the time.
Solid?
Yeah, solid.
Kevin.
Yep, that's the Minion.
How did Tucker have that ready to go?
Friday.
He's been
courtesy of
looking
Mike.
for any movies that contain the word Kevin just to be prepared for this week's Fed meeting.
Was that Kevin?
That was one of the other Minions talking about the Minion named Kevin.
Oh, I thought it said kidding.
No. Kevin.
No,
Kevin. Okay, I'd never heard it before. So
Kevin.
I guess. Oh, this is going to be a problem on Wednesday, isn't it?
Yeah. Not a lot of J's.
No, there wasn't a lot
Plenty
of
of Kevins.
Jerome.
Why would there be J's?
Jerome. Yeah,
Who's
I don't know
that?
Okay.
Anyways, piece in CNBC for Gen X investors. .com bubble haunts stock market portfolios closing in on retirement. And what this is getting at is your Gen Xers right now. They are entering into their 60s.
Yeah, the oldest Gen Xers are now 61 years old. So this conversation about retirement is going to rapidly shift from what has been a conversation about baby boomers for the last 2 decades to the Gen Xers.
I thought we were just going to spend 20 years not talking about who's retired.
We might, yeah.
That might be the
may do
answer.
that too.
But here's the thing. Gen X really started to accumulate wealth during the latter part of the 90s. That was when they were, in their mid to late 30s for a big chunk of them.
Yeah, how many? I've met several former tech employees who, how many people have you met in this age demo that were like very, very briefly stock market millionaires because of stock options and things like that from their employer before, crashing because they couldn't sell those options. They were restricted, all sorts of different things that prevented them from cashing in. But they definitely lived that in a very real way. And they also watched their parents retire during that same decade in a lot of cases.
Yep. So Gen X, again, by the typical definition, you're talking 1965 to 1980. So you were seeing anywhere from 3.7, about 3.4 to 3.8 million births a year. Mm-hmm. And again, you look at 1999, the vast majority of Gen Xers at the peak of the tech bubble were anywhere between 20 and 34 years old. So it was their first experience being able to save money as, workers in most cases. And by the time you're in your mid 30s, your earning power has, increased a lot from your early 20s ideally. So I think it's kind of interesting now that you have that first set of Gen Xers that is approaching retirement. You probably have some that have gone through mandated retirements depending on their profession at this point. But it's that question of how much do they trust the stock market based on the amount of wealth that was wiped out right in prime earning years of their career, where they went through just that decade of bad returns.
Right. Yeah. we will say I haven't seen a lot written on like how the average Gen X invests. Are they more conservative than their parents? Are they more conservative than previous generations who have come of this age? But nonetheless, they were old enough to be shaped by that decade time period. And so, I don't know, I would think that they are actually reasonably well prepared for what the stock market can throw at them. They weren't teenagers when the dot-com bubble crashed in most cases. They certainly weren't teenagers when the great financial crisis hit. And so they very much lived that period of time of people losing their homes, losing their shirt in the stock market, and hopefully are going in eyes wide open to this moment in time. But nonetheless, most of this generation is now probably within a decade of retirement and trying to sort through, hey, how do I navigate this change, especially with concerns about things and programs that my parents' generation really didn't need to worry about. The conversation around the funding of Social Security and Medicare was not all that pressing in 2000.
Sure.
These things are real concerns that this generation has. And by the way, the prevalence of the pension for this generation compared to the last two generations is very, very different. If you have questions about how to fund your retirement future and you're facing it down in the next decade, the time to start is now. I know it feels a ways away when you're talking about being 55 years old and working till 65 or 67. That sneaks up on you relatively quickly, and especially for those with kids that are, on the cusp of graduating college or in there now, once they're done, you're about to hit into your peak savings times, right? In many cases, your expenses are going down, your earnings are at all-time high, and now is the time to correct any of those mistakes that may have existed in previous decades. If you have questions like that, you'd like a consultation, you can call the folks at Armstrong Advisory Group. The phone number is 800-393-4001. Again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Piece in the Wall Street Journal: America's big cities are rapidly losing kids. They're not actually losing them.
I was going to
say. Let's be clear about
that.
Where
did they go?
I don't think the headline is great here. Maybe a better one would be like, hey, America's big cities have fewer kids now than before. But I get why that doesn't hit quite as hard.
More of a headline catcher here.
So here's what's happening. The number of children under 18 living in large U.S. cities has fallen 6% over the past decade. This as the actual population in those cities, depending on the ones that you look at, have either been stable or in some cases, growing rather quickly. So the question is, what gives here? And it's basically two things. Number one, fertility rates continue to slide. Mm-hmm. Number two, as people have kids, they are moving out of cities in a more frequent manner than in the past. That's basically it.
Yeah, pretty much full stop on this one. I don't know. Well, ramifications here. Obviously, inner city schools are often criticized for being a lot worse than the surrounding areas, and this is not a formula for those getting any better.
They're going to get worse.
Right? If you are seeing a smaller portion of those cities composed of families with young children, then they are going to consistently vote against more funding for public schools and all sorts of different programs that makes raising children easier.
And it's most likely, as those programs worsen, the ones with means to leave those programs and go somewhere else are going to, and so you end up with worsening performance and a worsening tax base.
Yep.
So it's not great from that perspective. I don't know exactly how you fix this, but
I mean, you have to completely rejigger the funding mechanism for schools, which seems unlikely.
Good luck with that.
Yeah.
Let's take a quick break. When we come back, we're going to do a little bit of stack roulette.
The Financial Exchange streams live on YouTube. Subscribe to our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network. Protecting your assets doesn't always mean giving up control. Get Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts. Learn how to protect your assets while maintaining planning flexibility. Get your free guide today by calling 866-848-5699 or request it online at LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Every mile can make a difference for a Massachusetts veteran. The DAV 5K Boston returns to Castle Island on Saturday, November 7th for a family-friendly day of community, remembrance, and support. Whether you run the 5K, join the 1 mile walk, or make a donation, your participation helps further the mission of the Disabled American Veterans Department of Massachusetts. Honor those who served. Sign up today at dav5k.boston. That's dav5k.boston.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The documents may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Our Senators Edward Markey and Elizabeth Warren and Representative Ayanna Pressley are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Follow the Financial Exchange Show on Instagram and see what's driving the conversation about Wall Street and economic trends. This is the Financial Exchange Radio Network.
Remember, you can watch the show live every day on our YouTube page while breaking business news, and all of our content is also archived, so if you want to go back and see an interview or particular discussion, it's all there with the click of a button. Just search the Financial Exchange on YouTube and hit that subscribe button.
Mike, what do you got for Stack Roulette?
I have this piece on the SEC and their requirement for quarterly earnings reports. So, right now, every traded U.S. company is required to disclose to the general public their earnings as of the most recent quarter, according to some generally accepted accounting principles. And the SEC wants to do away with that requirement, and I believe they're talking about going to a biannual requirement here. And some are up in arms. I don't really understand who, because while you and I, Chuck, are excited this week about earnings, the list of companies that we're excited about diving into is like 4 long. I think the vast majority of Americans do not give a darn about earnings reports. They don't tune in to the calls themselves.
No.
I know that there were like Nvidia earnings parties and things like that. I think those that really do care are financial media and stock market analysts who will have less to do, perhaps, if there are not earnings reports here. But I'll remind folks that merely because a company doesn't have to report earnings on a quarterly basis doesn't mean they won't. Right? Like, if you give out less information, that can be bad for your stock. And so I think most companies are going to continue to do this on a quarterly basis. It also doesn't suddenly allow you to lie about your company, right? Like, just because you're not required to put together a pretty expensive earnings report, by the way, like costs a lot of money to do this. You got to go hire an accountant, an outside auditor, all these different things, and put it all together.
It's not, you don't just plug it into TurboTax if you're, Delta or whoever.
And so I really do not see this as harmful to markets in any meaningful way. If companies still want to tell the general public something about their business that's changed in the most recent quarter, nothing precludes them from doing so. Go see IBM last week or 2 weeks ago when they told everybody that their earnings were going to suck. And if companies or investors don't want to own stocks that don't report their earnings on a quarterly basis, then those companies will probably go about doing the earnings reports on a quarterly basis anyway. So I do not see this as harmful in any way to markets. I don't think investors should be worried about it. And I think the only ones who actually care about this change are those with a vested interest in their job, basically requiring those quarterly earnings reports.
So, a couple things. Number one, when we talk about requirements, just as an example, companies aren't required to give earnings guidance for future quarters.
Right.
They choose to because they think it benefits them as a company to be able to give investors a sense of, hey, here's what we think we're going to do next quarter. But they're not required to do that. They still do. When we talk about the history of earnings reporting in the U.S., I want to put a few dates out there. Number one, 1934. The SEC was established, and with that, annual audited reporting requirements were put in place. So again, 1934, pretty big date for the Securities and Exchange Act, or the Securities Exchange Act, and included in there was, hey, you have to report earnings annually. You have to file an annual report, your 10K. So that's 1934, and obviously in response to the Great Depression and all the problems that went along with accounting issues then. In 1946, after World War II, the New York Stock Exchange, not the SEC, but the exchange, said, hey, we want listed companies to report quarterly. In 55, the New York Stock Exchange started requiring listed companies to publish at least semi-annual reports, and in 62 moved to full quarterly reporting. 1970 was when the SEC made quarterly reporting mandatory for all companies. So it's only in the last 56 years that that's been the case. The question on this is, hey, from a pros and cons perspective, the biggest cons to quarterly reporting, number one, the cost to companies, which quite honestly, if you get big enough, like it's a non-factor. Like it's
sure.
Yes, like it's going to be millions of dollars, but when you're selling billions of dollars of stuff, like it's immaterial.
There was a not small company. Who was it? Do you remember? Like in the last 2 years, there was a relatively big company who had to come out with a disclosure saying, we cannot find the accountants to do our audited financial reports, and so we have to delay our earnings call.
Well, Supermicro had all their accountants fire them. Is that the one you're thinking of?
No, I'll look this up while you're continuing to talk here. But it's not a small endeavor, especially for like a mid-sized company.
No. So compliance cost is a big one. The other one, it does kind of encourage more short-term thinking about stocks, and that hey, like it pressures managers to manage for the next 90 days. You could make that case. The benefits of it, you get more timely information.
Advanced auto parts, by the way.
Okay. So you're getting more timely information. You don't have as much time in between, so you have smaller surprises if something material changes. Like you don't have 3 months of surprising data.
Sure.
You have 6 months if you're going to semi-annual. And again, I think that even though quarterly reporting does lead to potentially more short-term focus, it does also force management teams then to say, hey, we can't let a problem fester and become an issue because we've got another report that's coming up. We got to deal with this, faster. So
yeah, I mean, the important question in my mind would be, does this encourage some degree of insider trading because there's more information that's not made public?
Whatever.
On a
We've got laws against
basis,
insider trading,
I just don't see that as a real risk.
And if someone breaks those laws, then you enforce them.
Yeah.
I'm not worried about that. Piece here from Bloomberg Opinion. Why are Americans so financially illiterate?
I love when journalists ask the question, "Why are you all so stupid?"
Yeah,
because they frequently
why are you
do.
all so angry?
Like that is commonly a subject.
Why
of an
y'all
article.
dumb? Is okay.
It's literally a picture of somebody with the dunce cap on.
Yeah.
So this once again gets at that 10-question survey that the TIA Institute has done, and pretty much says answer these basic financial questions. And Gen Z scored the lowest. Only about half of people could only answer 2 of the 8 questions about personal finance.
Not great.
Which isn't great. And I think that this person they go through, they're like, okay, maybe the advice that's out there isn't very good. Maybe people are turning to AI and they're not getting good advice from there. What do we end up doing about this? And I think the big thing is until you actually run into big problems related to specific, things that become commonplace financial problems, well, no one thinks it's going to happen to them. And so people just brush it off. No one thought they were going to go bust before the mortgage crisis. And then we learned, don't take out a home equity loan to buy a boat. That's not a good thing to do.
Yeah.
But
there are real world consequences here, right? I do blame part of this on why so many of our generation have $80,000 student loans. Nobody explained to them what the hell that means.
Right. You hear it when you're 17 and you don't understand what it means to have to pay that back. So I don't know what the answer is, but
education.
Well, yeah, that's probably it. Quick break for the whole rest of the day. We'll see you tomorrow.